RTD Live Talk. We're live, and it looks like we are streaming tonight in a different format than usual. Apart from the fact that, once again, when it comes time to just talking with this particular guest here, I'm experiencing some issues. So it must definitely be a good sign that we're going to have some good back and forth tonight. So before I dive any further, as always, want to give it a second to welcome any viewers. And so I apologize for the green screen, but work on the fly. It is what it is. So we're gonna make the best of it. But more important, I'm excited to have my guest, Bill Powers from miningstockeducation.com. And so, I've known Bill for, a short time now. We've had a chance to have a couple great discussions behind the scenes. And so I thought it's time to bring him on just so he can share his expertise in reference to how to spot and to really sort out from the mix what can be considered a good mining stock opportunity. And so tonight he's going to be joining us to share his thoughts on the whole mining sector. So first, let me get you in here, Bill, once I go back to my main screen. And so, Bill, welcome to RTD Live Talk. And so I appreciate you, joining us tonight to share your expertise as well as your thoughts on what's happening. So before we dive any further, who is Bill Powers? How did you start miningstockeducation.com? Give us a little insight in reference to the whole subject matter there.
As it relates to my journey into mining stocks, it kind of correlates to a lot of the premises and beliefs that you continually lay out on your channel, Rethinking the Dollar. Back in 2012, I began to rethink the dollar as a store of value, something you lift up always on your program. And that really drove me in when you looked at, excessive sovereign debt with these countries that will never be repaid. At that time, all the quantitative easing. And when I thought about my family's future and holding purchasing power with my investments, 2012, that drove me into investing in precious metals, physical gold and silver, bullion, and did that for numerous years. And my cost basis average per ounce was much more than what I was seeing silver and gold, the spot price priced at, especially in 2015 when it continued to dive. And I was very bullish on silver. My average cost basis over the years was probably about $21 an ounce. And then when silver in December of 2015 went under $14 an ounce, I said, you know what, let me look at leveraged ways to profit off of silver's rise, because I didn't believe it was going to stay below $14 an ounce for very long. And it didn't. And I just happened to get into silver mining stocks, was the chosen vehicle of leverage to profit off of silver's expected rise. And I bought my first silver mining stocks January 21st of 2016, which was 2 days after the silver mining stocks bottomed. And the silver price then went from $14 an ounce to $21 an ounce in a matter of about 6 or 7 months. And so saw some of my positions, junior silver miners, go tenfold in that short amount of time. And that really caught my attention and caused me to focus more on this little sector and try to profit from it.
Right. Understandable there. And so as of more people join us, I want to welcome you guys to RT Live Talk tonight, doing something a little bit different. And so as you see behind me, I have a green screen, but wasn't able to get some things up running. But let's focus on the subject at hand. So, Bill, so in reference to the opportunity of leverage, as you say, of getting into the underworkings of how precious metal comes to the surface and into people's hands, you found a great opportunity when it comes to mining stocks. And so from an investment standpoint, I myself, apart from just having met a few people in the industry, don't really know much about it. What are some of the most important aspects, I guess, in looking for opportunities when it comes to mining? Because I would imagine a lot of people have projects, have ground that they say contains metals in it, but yet if it's not in production or being extracted just yet, it could be a lot of questions, things about that. So give us some ideas of what are some things you look for when you first start looking for mining opportunities.
The first thing I would advise a new person that's looking to invest in mining stocks is that you have to understand that the industry is very cyclical. So it can multiply your wealth quickly like it did for me in 2016, or it could steal your wealth quickly. So it's cyclical for two primary reasons. It takes a long time and it takes a lot of money to discover mineral resources and then eventually bring them to the market. So it creates these huge imbalances of supply and demand. And with these huge imbalances of supply and demand, you get these huge boom and bust in the mining industry. So a company could go from extremely profitable, and then as the commodity price, the commodity that they mine, as that commodity price dives, that company could actually be selling that commodity for less than what it actually costs them to bring them to market. And that goes on for a period of time, and then it shifts because they're not making money. They bring less supply to the market. Therefore, the price of the commodity rises, and it continues to rise and rise and rise because they can't just turn on more supply on a dime, because it takes a lot of money and it takes a lot of time in this industry to bring that product to the market. The price rises. And then after all that time and money invested in mining that commodity finally catches up, then the price of the commodity begins to crash because now the market's flooded with supply. So that's the first thing. If you're going to invest in this sector, you want to make sure that you are investing close to a cyclical bottom, or at least that you're in an uptrend. Because if you catch it at one of the peaks or in a downtrend, it could take, for example, some junior silver and gold miners from 2011 to 2015 dropped 95%. The one company that went tenfold for me in 6 months was 95% less than what it traded for in 2011. So that would be the first thing. The second thing would be you have to look at investing in mining companies as a venture capitalist, because as you kind of referenced, that many of these companies are pre-revenue. So in your head, you want to say, is this company actually a business? Is this company making money? Do they have a product that they're selling at a profit that's causing the balance sheet to be good for this company? Or is this company simply raising money because they have a hope that they're going to find a mineral deposit? Or if they found a mineral deposit, they're having to study it, drill it up, learn more, figure out if they're actually going to one day be able to raise the money and bring it to market. So the first thing is this company making money, or is this company in the stages of not making money? And then there's a whole lot of risks and things you have to look at from there.
So I wanted to, it's a recent subject matter that's just hit the headlines, or more so on the alternative media side, a couple of days ago. I want to get your thoughts on it. It's the idea that I guess Refiner Republic Metals filed for bankruptcy. Have you had a chance to find out about that, look into that?
That's not something I was paying attention to. No, so I'm not familiar with what's going on there.
Okay, so no problem. So to my knowledge, I mean, it was a really pretty credible bullion supplier that all of a sudden going bankrupt. So what I imagine is that the supply side of things is probably tightened up around the industry. And so I wonder, how will something like that impact the mining sector? Because I know that a lot of mining companies are selling to bullion dealers as well as the refineries and whatnot at somewhat of a loss, because the current price is not what the actual cost is to get out of the ground. Is that something that you actually pay attention to?
I pay attention more to individual companies. So, a lot of the gold companies would produce doré bars, which they would refine it to get it to a place. They would process and refine it, whether they do it in their own processing system or they subcontract that. Then they produce the doré bar, which then can be sent off and refined again. So I think what you're talking about is once it leaves the mining company, and my concern as an investor when I look at the mining companies more has to do with just that company and them selling it to, I believe, the company that you're talking about that had problems.
Right, understandable. Now let's talk a little bit about just the mining sector in general. I assume that there are some jurisdictions and countries that are more friendlier than others. And so just from, not to really, put any companies out there promotional wise, but what are some jurisdictions and areas that you focus on? Is it just solely here in the U.S.? Do you go below the equator, out east, out west? What are some things that, really excite you that, you keep an eye on?
So I'm willing to go anywhere in the world. If we're talking about silver, because that's been a theme here, and I like silver, Mexico, just right south. You and I are in Michigan here. If you go to Mexico, that's a great silver mining jurisdiction. However, if you go a few countries south, you go into Guatemala. The Guatemalan government shut down the third largest silver mine in the world in this past year. That was shut down, and for the foreseeable future, they no longer have their permit, their license to operate and mine the third largest silver mine and deposit in the world that we know of. So that would be an example of a jurisdiction you wouldn't want to go into. And when you get into these more politically unstable, lesser trust in the rule of law countries like Guatemala, you can get that. And if you get a socialist government, like I would never touch Venezuela, you get a socialist government that's greedy, and they'll nationalize. They'll essentially steal, in my opinion, the deposit, if there's known gold or silver or copper or whatever it is, from the company and therefore the shareholders. But I'm not limited jurisdiction-wise to any continent or country. I'm willing to look at any opportunity as a standalone.
Interesting. Now, another thing in reference to just opportunities is I can imagine that because of the mining companies that actually bring forth metals, and because of the price situation now, the price is well below what would be typical given the current money supply. And so demand is still high, but yet, the price isn't really favorable for investors and actually physically holding. And so I've actually heard about, I'm not sure if you might be familiar with it, but I want to say there's some pretty big mining companies that's kind of looking into, I guess, the blockchain aspect and utilizing possibly tokenizing untapped resources or whatnot. Is that something that, can you see that being an option as a form of investing down the line for some people, utilizing the whole blockchain tokenization aspect?
Yes, absolutely. And there's been a number of companies. I featured one on my site called Jinbi Token. And then I know that there's numerous other companies that basically bring together the blockchain technology with the actual physical mining of gold. The one thing I will say, because I know both you and I believe that silver and gold in your own possession has no counterparty risk other than, theft. But when you still do that, you have the blockchain on the ledger saying that this ounce of gold or this gram of gold belongs to you. There's still counterparty risk there. That'd be the one thing that I would point out to the average person, because you're still relying on the company that's overseeing this whole process, to be honest, and there's still storage involved that's not within your control. And it still could be, open to nationalization or confiscation by a government, I suppose.
Right, I do agree. Now, so I'm glad you hinted at the idea of counterparty risk. That's something I'm really looking forward to diving into further from just a way of awakening more people to the risk that are involved. And so, and you mentioned about nationalization of mines or whatnot. Is that something, like you mentioned, Guatemala licensed? So the company of Guatemala, was that a foreign company that was trying to produce there, or was that a local company that was trying to produce? And is it often that if governments get in trouble, they close up mines and revoke licenses, or what's some of the risk side of things in jurisdictions that are well beyond our borders?
So we'll use this example. This was the company is Tahoe Resources, and the silver mine is the Escobal silver mine. Mm-hmm. And that was actually in production. It was producing, I believe, about 20 million ounces of silver per year, which is a lot of silver. Mm-hmm. And then there was strong anti-mining resistance. And from the company's perspective, they say that the far left, political far left activists came in and basically stirred up trouble with the indigenous people there in Guatemala. Mm-hmm. And then the indigenous people began to claim, hey, you didn't consult with us. You didn't really get our permission to have this mine here. And then the companies would argue back and say, no, actually we did. We went through the process. We have what's called our social license to operate. We consulted with people. We have all the paperwork. We've already been in production. You're trying to stop us after we've already crossed that hurdle. And so what happened was then the court system in Guatemala then said, okay, we're going to examine this. So they shut down the mine, and then the company just had the mine standing there hoping to restart it within a year. As it went to the Constitutional Court of Guatemala, then they said, we're going to shut it down. And that's just kind of where it stands right now. And actually some U.S. politicians, because it's Tahoe Resources is a U.S.-based company, I believe in Nevada, some U.S. politicians, I think representatives or senators, wrote to the Guatemalan government saying, please reopen this. It's in our best interest. It's in your best interest. So that's an example of not just greedy government, but that's an example of if you don't have the approval and the consent of the local people, then that's going to be a problem for you. And sometimes things will never get built. Or in this case, it was a problem after the mine actually went into production. But there's a whole lot of risk. This sector offers a lot of reward if you can do it right with the right company at the right time. But there's a whole lot of risk involved. And this is just an example.
Interesting. Now, touching on how the future outlook might be, because a lot of people, when you say precious metals, sound money, it's always, as you mentioned earlier, if you don't hold it, you don't own it type of mentality. But yet, as you hinted at earlier, you want to leverage the opportunity of actually having some skin in the game in reference to the companies that actually bring forth from the ground. Now, looking forward, give or take, the environment we're in now, I'd imagine that, a lot of people realize that, things are changing behind the scenes in reference to our current reserve currency, and possibly one day no longer being the head honcho out of all fiat currencies. And so when we get to that point, if it comes, what are your thoughts on how the response might be for the mining companies that produce physical silver? Will there be a sharp spike in prices, and as well as, the mining share prices or whatnot? Just share with us your opinions on how, if things got really out of control, how things might end up.
I think if I could say it succinctly, Bill Holter, I'll steal from him. He says silver will be gold on steroids, and the mining stocks will be silver on steroids. And that's how I see it playing out. And those companies will become very profitable very quickly. If we get into that hyperinflationary scenario, though, what will society look like? It's been said, when gold's 5,000 a year from now, will your neighbor like you, or will your neighbor be trying to steal the food from you? So is that the world we want to live in? And if there's that chaos and societal disruption, how will that play out across the world? And how will that, affect the mining companies, who one of their main costs is oil? What will be the price of oil? I think there's a lot of unknowns, but I can say this, that if there is a rush into gold, there's going to be a rush into silver, because silver always outperforms gold in a sustained bull market. And then the mining sector, particularly the junior mining sector, it's such a small sector that when the money wants to rush into it, Doug Casey says it like this: it's like trying to force the contents of Hoover Dam through a garden hose. And that's where you get the stocks doubling in a day, and then doubling again the next day. And, they rise 35% in one day for seemingly no reason. That's what happens in a sector like this. You get into the mania phase quite quickly. And if you're positioned before that, and you understand how these stocks in this sector works, you can profit from it.
Interesting. Great point there. Now, so everybody, we're streaming live, RTD Live Talk. I'm excited to have my guest, Bill Powers, the host as well as commentator over at miningstockeducation.com. And so I thought it was important for us to have a different perspective from someone who's actually in the ground, per se, as far as looking for opportunities to extract wealth from the ground and get it out to physical production. And so if you guys have any questions in reference to the mining sector or whatnot, feel free to ask in the chat, and I can ask the guests directly, or the number. Everybody knows the number. It's 1-833-LIVE-RTD. Feel free to call in and ask any questions you might have in reference to mining stocks or anything related to precious metals. And so it's a great time to find out some things that we don't really get a chance to talk about much on this channel. And so, Bill, I want to hit at that question, because you kind of gave a different tier of mining stock companies. You said junior miners. So give us some of the tiers and what makes a junior miner, and what's the one above that? And for those that aren't familiar with the different tiers of mining.
A junior miner, like if I just come up with some categories, could be, let's say, $100 million market cap or below. And for those that may not know what I mean when I say market cap, the market capitalization is the total outstanding number of shares times the share price. So a company that the market values at about $100 million or less, and that are companies that are exploring for mineral resources and or have discovered a mineral resource, but they're in the developmental stage because it takes a decade. For some minerals, it could take more than a decade before that would get to the stage of production. So that would be a junior miner. And then when you progress much beyond that, you get into small producers, or what we might call mid-tier producers. And these are the companies that actually have cash flow and have revenue. And if I could just create a category on the spot here, maybe that's between $100 million market cap and, let's say, $1 billion or 800 million. And you get a company within there. And then as you progress into the multi-billion-dollar market caps, then you're in what's called the majors. The majors have many mines in many countries. They often mine many commodities. So they're going to be more stable because their risk is divvied out above many jurisdictions and many commodities. But the upside also isn't there. And that's the draw of the junior miner, because it's just like the San Francisco gold rush or the Yukon gold rush. When you invest in a gold exploration company or a copper exploration company or uranium exploration company, you're investing. You do so, if you're an astute investor, you do so based on probabilities, based on the track record of the management's success. It's not simply a lottery ticket. But if after you do your due diligence and they're successful, that stock for you actually will function like a lottery ticket, and you can see 100-fold gains in some of these junior explorers. However, the majority of junior explorers amount to nothing. They end up at zero, or your position in that company is severely diluted, because just like the Federal Reserve, how they print money continuously and have that ability, junior mining companies often can print shares. And as they print shares, if you're already an existing, they print shares or issue shares, I should say, in order to raise money to go explore. But if you're an existing shareholder, when they're issuing a lot of shares, then your position in that company is diluted. So these are junior miners. And then developers are those that are trying to get a permit, trying to raise money, trying to verify exactly what's in the ground and how they could pull it out of the ground, process it, and eventually bring it to market. And so there's a couple different categories. And Mike, if I could just mention one more category, and that would be a royalty company. Royalty company is probably going to be it is your least risky mining investment that can also be very profitable, especially if it's a gold royalty company and you believe the price of gold is going to rise. So, for example, one company, Sandstorm Gold Royalties, which is a sponsor of my website and podcast, I share forthrightly, but they have, I think it's like 190 royalties all around the world on gold, and spread out jurisdictional risk everywhere. And they have no debt. And what it is they help fund these companies when they're at that exploration or development stage. They might give them 2 million or 10 million or what have you dollars. But then they do that in exchange for a contractual obligation to where the company, when they begin to produce, they agree to give them 2% of the revenue, or they agree to sell them gold at $400 an ounce when gold will be $1,600 an ounce. So the companies really become a cash cow. So it's almost like an investment company that invests in explorers and developers, and then the return just continually comes back to them. And some of those companies can really see steep share price appreciation, because when they have the royalty on that company's property, where they're, when they invested, they knew that they hoped that there would be a mine there one day. They didn't know exactly how big the mine would be, but they have a 2% royalty on the revenue of that company, let's say. And then that company discovers that the deposit, where they thought it was a certain size, it's actually 4 or 5 or 6 times as big. So that royalty company just gets essentially free money, free profit from that. So that's, if one is beginning to look at the mining sector, investing in a solid royalty company would be a lower risk, yet still good potential reward way to go.
Interesting. Now, you speak of like opportunities. And so, one thought came to mind is, since you're hands-on, you know of certain junior miners, as well as the different tiers of mining companies that actually bring forth. So you actually see hands-on what comes out of the ground for the most part, because you look at their books and all the detailed things that most people who buy physical don't really care about, in a sense. And so I want to talk about the gold to silver ratio slightly, given that you actually know how, the samples that come out of the ground and the different ways of measuring what's in the ground. And so it's currently, I think, 170 or one was 1 to 80. Now, this is more of opinion. Do you think that's something that will be sustainable in a nominary form, or do you think it'll probably go to 1 to 1? Some people say it could go 1 to 1 based upon the utility and usefulness of silver. What are your thoughts on the ratio aspect?
Well, I have to rely on what Keith Neumeyer, the CEO of First Majestic Silver, has said. I've had him on my podcast, and he says that for every 1 ounce of gold, we pull out of the ground 9 ounces of silver. But the traditional historical value comparison between the two, I believe, is 1 ounce of gold has historically equaled about 15 ounces of silver. Like if you go back to the Roman times and so forth, I haven't read that recently, but I'm pulling this out of my long-term memory, and I believe it's about 1 to 15, which is a ways away. I think we're over 1. I haven't looked at it recently, but I think the silver gold ratio, it was like 80 or 84 within the last 3 weeks. So, and when there is the bull market in gold, right now gold's been trading sideways for 2 years. When you get that strong bull market in gold, then silver will become even more explosive. And what you see typically, that ratio could be 1 ounce of gold to 30 ounces of silver. And, some silver mining CEOs that are very bullish, like Keith Neumeyer, will point out that maybe it could get to 1 to 10. I've never heard 1 to 1 though, because, most of the gold, almost all the gold that's ever been mined is still available to us today. Whereas with silver, as you say, we use it in our iPhones, we use it in our computers, our electronics, solar panels. Not all of that is recycled. But when the price of silver rises, more of it will be recycled.
Right, good point there. And so, I didn't mention this before we went live, but as I did mention that November is going to be considered from the RTD channel Get Your Weight Up month, and where I encourage people to get physical. Get physical, and as you said earlier, if you don't hold it, you may not own it. So you might want to make sure you got some weight about yourself in a good way. And so what I've been doing pretty much every live stream, whether it's myself or I have a guest on, I like to extend an invitation to you tonight to help put some weight into the viewers' hands or pockets or whatever. And so I wanted you to take a minute as we draw towards the end of our conversation before we sign off. I want you to come up with a question that is somewhat challenging, but yet something in the mining sector, perhaps, that is a terminology or something of that nature to pose to the audience. And then I'm going to give a countdown. And if anyone within that 5, 6, or 6 seconds get it right, I'll then try to help them get their weight up with a 1 gram gold bar as a part of the SD Bullion deal that we have going on this month, where they're helping the RTD viewers get their weight up. So you can find more information in the link below for those that might be new tuning in. But I'll give this away if the person gets the question right. So give it some thought, make it challenging for everybody, but I want you to put some thought to that, and let's try to help somebody get their weight up. And so I'll come back to you, or let me know when you're ready. But the next question I have for you is, so you shared some pretty detailed information in relevance to the whole mining sector and opportunities. Now, for someone who probably has never put a single dime into investing directly in that regards, what are some steps that you would recommend someone how to educate themselves? Of course, they have your website. Give us some practical steps to get caught up to speed before we just put money out there.
So Rick Roll, who you've had on your show, he's a broker with Sprott, and he focuses on natural resources. And he says that one of the reasons that he's been able to do very well for himself and his clients is that there's a knowledge arbitrage that he's able to take advantage of in this sector. In other words, he doesn't think so highly of most of his competition. So that's one of the reasons why I focus on the educational aspect of this, because you can make a lot of money or you can lose a lot of money, like I said. So when I got into this, and after I did really well in 2016, then I bought over $1,000 worth of books. And I began to read about that. So there's certain good books on mining stock investing, like some primers that you could read. The Northern Miner has one. I think it's like $40 on Amazon, the newest version. And it's on my shelf. Mining Explained is the name of that one. And that would be just a 120-page or so book where you could jump in, get going, and just begin to understand the whole process. Because you want to, it takes a couple years minimally before you can really understand the whole process of mining and begin to evaluate mining companies. Even if you have expertise at evaluating other companies, the mining sector is such a different beast. So I would get that book, and then I would begin to listen to interviews of professionals, people that know what they're doing, and just you'll glean a little here, you'll glean a little there, and then also go to companies' websites. And any good company is going to have what's called a presentation, which is like a PowerPoint presentation. Take the knowledge you learned from the book, what you're learning from people you're listening to, and then try to read and understand the company's presentation. And those would be some action steps that you could begin to take to really learn how to evaluate these companies.
So, as we draw towards the end of our conversation, and so as always, I want to, set the standard high as far as, helping educate as well as just give a little tidbits on how to get things done. And so before we can actually get started with the giveaway aspect, as we draw towards the end, we know it's late. And so I'd like to request some participation from the audience with just a simple thumbs up. And so typically I like to have a certain percentage of the viewers to thumbs up ratio. So I said, if we can get 20 thumbs up, as of right now, it looks like an 11, according to my count, with about 30 or so viewers right now. So all it would take is basically 20 people to give us a thumbs up, and then you can share your question and help put some metal in people's pockets. So we may or may not have a chance to do a giveaway. So I might have probably, warned you a little bit too late. But with that being the case, as we draw towards the end, what are some key things beyond the steps that you want to leave us with? And also miningstockeducation.com, your site there. Let viewers know what they can expect when they do visit you, and you have a YouTube channel as well. Give us some information as to what you try to accomplish with your website.
On my website, I have my interviews posted there with various professionals in the mining investment community. There's the transcripts there of my interviews. I also post relevant articles from the web, kind of drudge style report of things that I think are pertinent and interesting for mining investors to find. So that's also the base for my podcast, and all the links to the different podcast apps where one can listen to my show are found on my website.
So we draw towards the end. We got 17, looks like 18. And so I want to give the people a chance, because I think that the opportunity they have to get physical, it takes no effort whatsoever to get physical with this giveaway here. And so we got 18 as of now. So I might have to cut it there. So we may not get a chance to have the question. So I might have to have you on again some other time, and we can go a little deeper and hopefully get the 20 thumbs up. So we're at 19. So what I'll do is, if you have a question, let's put it out there, and and a part of the procedure would be, once the question is given, I'm going to count from, I'll give it 7 seconds out loud, and if I see the answer, I'm so not sure. Do you have this stream pulled up on your website, on your screen?
No, I don't. I just see you.
Okay, because what I was gonna say is, because I don't know the answer, so it'd be hard to have a giveaway if I don't know the answer. But we got to figure out how to get the answer to me so I can see, because typically we can see it together. But
well, I can ask a question that's sort of related to the mining sector that you're going to know the answer to, if you want to do it that way.
I want to know it. Okay, so I got to quit. So I might win something myself. Okay, so but how about if I don't get the answer? That's what I'm concerned about.
Okay.
So do you feel confident that I'll be able to get the answer?
I think so. Yeah.
Okay, let's do it. Hey, I'm about that challenge. So
if you don't know it, I'll ask another question. I got 2 questions that I think you could figure out or know.
Okay, is your cell phone near you?
Yes, it is.
Text me the answer.
Oh,
if you don't mind, text me the answer to 1 and 2, and then we'll begin. Oh. Because we now have 21. So as you see, we're trying to have some fun and while educating at the same time. So I want to make sure it's fair to everybody. And so I want to give you guys a chance. And I think, if you don't walk away with some metal, at least you'll learn something and probably remember it, because once again, you have nothing to lose other than just a guess, or you might even actually know. So, but I definitely guarantee you'll know the answer once it's given. If you don't win, it's something you're going to remember. And so as I wait for Bill to text me the answer, let me check my phone real quick. And so once I get the answer, I'll let him put the question out there, and then I'll give the countdown. And if we get it, we'll make it happen. If we don't, we'll sign off. But it was fun anyway. So whenever you're ready, Bill, whenever I receive it, we can go from there. But other than that, people, it's a great opportunity. So I hope you guys are taking advantage of, once again, getting your weight up. It's that time of month. And so, all right, let me check. Let me see if I might have something here. Okay. So I got the message. Okay. So let me make sure I brush myself up on it. But unfortunately, it looks like it's okay. So the answer's in the subject heading?
Yeah.
Okay, fair enough. All right. Here we go. So screen's on you. Once a question, it was probably a little delay, but it's whatever. So I'll give it 7 seconds. But give your question, and then I'm going to count down from 7 to 0. If I see this answer in the chat, we got a winner. If not, oh well.
Okay, here it is. The NFL team based out of San Francisco is named after this event in U.S. mining history.
So I'll give it a little delay, make sure everybody heard that. And then I'm going to count down. So everybody, I hope you heard that, because I'm going to start counting. 8, 7, 6, 5, 4, 3, 2, 1, 0. So the question was put out there.
Should I say it again, or?
Okay, so I got some answers coming in. So everybody received it. So I will honor the first one, which I'm not seeing it. So, so it's over. The countdown is done. We got a couple answers out there. But the answer, to be more specific, it's a certain year to it. So no one has it. But good news is, Bill,
we got to say the name of the team, right, to help people figure it out.
I will in 1 second, but it looks like we might have a call, which is a good thing. So if you got a second, we can get this call. Hopefully, it's relevant to the mining sector. Okay. But let's just try this out. Hello, caller. What's your name? Where you calling from?
Hi, Tim, Colorado. I'll keep it short for you.
Tim from Colorado. What's your thoughts or what's your question for Mr. Bill Powers this evening?
Yeah, well, first of all, thank you very much for the excellent podcast, and you got a great Bill there. He really knows his stuff. I wanted to ask Bill, what does it cost to take precious metal out of the ground now? Because, I mean, that's his specialty, like either silver or gold. What is the markup?
So there's what's called the all-in sustaining costs. When you read the mining company's financials, the all-in sustaining cost is when the companies figure out what it costs to, let's say, pull out an ounce of silver out of the ground. That it depends on the mine. It depends on the company. There's a lot of variables. It depends on the currency of where the company is mining, because obviously that affects labor rates and what their ability to purchase things. So it could be anywhere from let's say silver. A low-cost silver producer might be $8 an ounce. A high-cost silver producer could even be $18 an ounce. So there's a total range because there's so many different variables. But there are some silver projects that are not economical when silver as it is today is under $15.
A lot more variables than I thought.
Yeah, it's a lot more variables than he thought, he said.
Yeah, there's a lot of variables. I mean, I could just name them, but processing fees, cost of oil, cost of labor, the cost of the currency, and with a mine, this model of business, a whole lot of things can go wrong when you're talking about digging a product out of the earth, labor, union strikes, as we talked about, the local people oppose the mine and get it shut down, or it's determined it's no longer good for the environment to mine, and there's resistance from the government. There's just all sorts of variables.
Interesting. So, Tim, thank you, my friend, for calling in.
Okay.
Appreciate you.
Have a great night, guys.
All right, you too.
Thank you.
All right. Interesting. So, Bill, it has been great, my friend, having you join us. And so, as I look at the chat, and so apart from the delay, now, you know, so the answer, according to what was given to me, is it's the year that makes all the difference. And so, Bill, share with us the entire answer you sent me.
The San Francisco 49ers, based after that California gold rush back in 1849.
Okay, so 1849 is the answer. And so if it would have been in a shorter time frame, we have a person, Richard, who would have won a gold Graham, but he put 1949.
It was a typo.
So see, typos can cost people some earnings, you know. And so if it would have been 1849, hands down, Richard, I would have honored that. But then you corrected yourself over a minute and plus later, which gives you time to Google. So you know, what are your thoughts? Do you think I'm correct in that, or what?
It's your show, brother.
Well,
I'll let him hate you, not me.
Yeah, it's not a matter of hate, because
I'm teasing.
I know I've had lots of giveaways, and I've actually given away stuff all the time. So somebody's going to win one of these or more, but you have to be crystal sharp. That's like, you know, Richard, you know, just talking right to you. That's like saying that you hit the mega ball, but you forget one number, and instead of getting 1 billion, you get 200 million. Yeah, that's a big difference, but you can't argue and say, man, I was off one number. So, Richard, I appreciate you, man, but I'm going to have to say that was incorrect for this evening. But I believe that you're going to come back strong next time. So, but Bill, it's been great having you join us. You know, hopefully you had a little fun with us, and I appreciate you for educating us. Give everybody a chance to follow you via social media. Tell us where, you know, give us some more details where they can go to stay in tune and how to get to your YouTube channel. Give us all the rundown.
Yep. If you want to find me on YouTube, just type in miningstockeducation.com. Same place on the web. And on Twitter, you can find me at miningstockedu. And thanks for having me on, Mike. Really appreciate it.
My pleasure. My pleasure. So everybody, it's been great having you guys join us for RT Live Talk. Hopefully you guys were informed on alternatives, because it's all about alternatives when it comes to rethinking the physical and Federal Reserve note, aka the dollar. And so I trust that you guys were informed and educated, and I'm sure you won't probably forget the 1849 date time frame moving forward when it came to the gold rush. So everybody, appreciate you for tuning in. Make sure you give us a thumbs up, and make sure you go to the YouTube channel and subscribe to Bill's channel so you can get more information from people he interviewed over there. And definitely, Bill, it's been a great honor having you on. Look forward to having you on in the future. Enjoy your evening. And guys, I'll see you later. I'm going to say peace out.